Did you know that more than half of India's startup unicorns are funded by Chinese investors? That's right, 18 out of 30 Indian unicorns have received Chinese investment. And believe it or not, according to Indian think tank Gateway House, they injected $4 billion into India's startup ecosystem in 2019 alone. According to Traxion, $14.5 billion is the total amount of funding that Indian startups raised in 2019. So China is 4 out of that 14.5, which means that we're left with 10.5. But then we've got American investment, which was roughly $9 billion in 2019, according to information and analytics company Venture Intelligence. And so we're left with just $1.5 billion that Indian VC firms have to share with the rest of the world's VC community. So in other words, if I'm being really generous here, India's investment into its own startup ecosystem makes up 10% or less of all investments into Indian startups. But why is this? Why are foreign VC firms investing more into India's startup ecosystem than India is? Well, the simple answer is that India just doesn't have tech giants like Alibaba and SoftBank and Google and Facebook that can invest the hundreds of millions of dollars required to grow this ecosystem at the speed that it's accustomed to. In a way, you can think of India's startup ecosystem as a startup in and of itself, raising lots of external funding in order to grow in a way that wouldn't be possible if it was relying on its own revenues or personal investment from the founders. And also, the investors see the potential that this startup has. India is on its way to becoming one of the world's superpowers. Yes, you've still got a bunch of issues here that need to be resolved, like poverty, a lack of basic public infrastructure in a lot of places, diseases, malnutrition, disabilities, unemployment, corruption, racial and religious discrimination, but these are all part of the development process, and India's investors know that. They aren't investing in India because of what India is today. They're investing in India because of what India will be in the future. That being said, this has been going on for a while. Chinese and American VC firms have been investing in Indian startups since before Flipkart, InMobi, Make My Trip, and Book My Show. But recently, with the COVID-19 pandemic, India has been reevaluating the relationship that it has with Chinese investors. And this reevaluation has manifested itself in a number of different ways. For example, India recently revised its foreign direct investment policy for investors that are based out of neighboring countries. This policy revision, of course, was aimed at China, with the goal of adding a layer of complexity and Indian oversight to the investment process for Chinese investors. Many countries around the world have begun to avoid or even boycott Chinese products and apps, and India is one of them. Prime Minister Modi recently encouraged the people of India to go vocal for local in an effort to promote and elevate made in India products and services above those made outside of India. And this call to action has made Indians, including startup entrepreneurs, more aware than ever of how deeply China has penetrated India's economy. And so with this in mind, we at Backstage with Millionaires thought it would be worth taking a look at some of the Indian unicorn startups that have received funding from Chinese VC firms. Starting things off at number 10, we have India's only gaming unicorn, Dream11. Founded by Bhavit, Sheth, and Harsh Jain in 2008, Dream11 is a fantasy gaming platform that enables its 80 million users to play fantasy sports like cricket, football, basketball, and hockey. Dream11's users can either play these fantasy games casually and for free, or competitively in an attempt to win cash prizes. The company became a unicorn after it raised an undisclosed amount of funds from Chinese asset management firm Steadview Capital in 2019. They've also received funding from Chinese investor Tencent Holdings, who invested $100 million into Dream11 in 2018. Next up at number 9, we have Gurgaon-based online shopping marketplace Snapdeal. Founded by Kunal, Bahl, and Rohit Bansal in 2010, Snapdeal is a value-focused online marketplace aimed at meeting the needs of folks who are new to online shopping and might be using the internet for the first time. Now, in light of this, a majority of Snapdeal's orders come from Tier 2 and Tier 3 cities, but this hasn't always been the case. At one point, Snapdeal was targeting the same customers as e-commerce platforms like Flipkart and Amazon, competing for market share and trying to increase their revenues by focusing on GMV, or gross merchandise value. In order to accomplish this goal of becoming India's leading e-commerce company, Snapdeal raised roughly $1.8 billion between the date that the company was founded and mid-2017, when things took a turn and the company began the process of reinventing itself. Of this $1.8 billion, $500 million was raised in a round led by Chinese companies Alibaba Group and Foxconn Technology Group, alongside the round's other lead investor, Japanese SoftBank Telecom Corporation. Moving on to number 8, we have grocery delivery startup BigBasket. BigBasket. Founded by Abhinay Choudhari, Menon, Vipul Parekh, and Sudhakar in 2011, BigBasket is one of India's largest online food and grocery platforms, offering over 60,000 products from 1,000 brands. The company caters to over 10 million customers across 25 cities, and these numbers are made even more impressive when you realize that online grocery delivery has historically been one of the most difficult markets in India to crack, as it has low margins and high churn rates. As a result, a lot of early grocery delivery startups have either failed or have had to pivot just to survive, but BigBasket is one of the few online grocery delivery startups that has managed to thrive. In fact, BigBasket became India's first ever grocery delivery unicorn in 2019. However, the company's success came at a price, as the founders had to give up equity to bring in new investors who would help them to scale their business. To date, BigBasket has raised over $1 billion, most of which has come from foreign investors. Specifically focusing on Chinese investment, Alibaba became BigBasket's largest shareholder when it helped the company raise $300 million in its Series E round in 2018. As of 2019, Alibaba Group was still the largest stakeholder with a 26.26% stake in the company, and they've made a couple more investments in BigBasket since then. Coming in at number 7, we have food tech startup Zomato. Founded by Deepinder Goyal and Pankaj Chadha in 2008, Zomato started as a search and discovery platform for restaurants in the Delhi-NCR region. At the time, it was known as Food eBay, but after eBay took issue with this for obvious reasons, the company was rebranded to Zomato in 2010 and started its food delivery service in 2015. Earlier this year, Zomato further strengthened its position in the food delivery space by acquiring Uber Eats in India. Today, Zomato is delivering food across more than 500 Indian cities, and its restaurant search and discovery platform is present in over 10,000 cities across 24 countries. In the company's early days, Zomato's growth was primarily funded by Indian internet giant InfoEdge. However, in 2018, Alibaba's financial services company Ant Financial became a stakeholder in Zomato with an investment of $200 million. And then later in the same year, they invested another $210 million. According to Crunchbase, Zomato has raised a total of $914.6 million across multiple funding rounds, and Ant Financial alone has invested over $750 million. According to media reports, Ant Financial owns more than a 20% stake in Zomato, making it one of the largest stakeholders in the company. Next up at number 6, we have Zomato's largest competitor in India, food delivery giant Swiggy. Founded by Sriharsha Majety, Nandan Reddy, and Rahul Jamini in 2014, Swiggy started its operations as a hyper-local food delivery platform by partnering with a couple of different restaurants in Bangalore. Today, 6 years after they started, Swiggy has more than 140,000 restaurants on its platform, and these restaurants serve 20 million customers in over 500 cities across India. Unlike Zomato though, Chinese investors have been a part of Swiggy's journey since its early days. Hong Kong-based SAIF Partners was the first company, along with US-based Accel, to invest $2 million in its first institutional funding round in 2015. Since then, Chinese giants like Meituan-Dianping, Tencent Holdings, and Hillhouse Capital Group have invested upwards of $500 million. To date, Swiggy has raised a total of $1.6 billion across multiple funding rounds. Moving on to number 5, we have B2B e-commerce unicorn Udaan. Founded by former Flipkart employee Sujeet Kumar, Vaibhav Gupta, and Amod Malviya in 2016, Udaan offers a technology platform that connects traders, retailers, wholesalers, and manufacturers on a single platform. This startup, which believe it or not has no CEO, became one of the fastest Indian companies to join the coveted unicorn club after it raised $225 million in its Series C round in 2018 from Hong Kong-based Russian investment firm DST Global and Lightspeed India Partners, which of course is the Indian branch of American VC firm Lightspeed Venture Partners. Then in 2019, Chinese conglomerate Tencent Holdings and Chinese investment firm Hillhouse Capital bought a stake in Udaan and helped the company raise even more funds from other VC firms in a round that closed at $585 million. Coming in at number 4, we have Indian ride-hailing giant Ola Cabs. Founded by Bhavish Agrawal and Ankit Bhatti in 2010, Ola is aiming to build mobility solutions for 1 billion people worldwide, and they're doing this through their ride-hailing platform, which connects over 1.5 million drivers with millions of customers, serving more than 1 billion riders every year across 250 cities in India and also in countries like Australia, New Zealand, and the UK. Recognizing the toll of millions of vehicles on the environment, the company has also started its latest venture called Ola Electric, which aims to put 1 million electric vehicles on the world's roads by 2021. But of course, in order to achieve such lofty goals in such a short span of time, Ola needs external funding. To date, the company has raised $3.8 billion from its investors, some of whom have been Chinese investors. The first Chinese investment in Ola Cabs came from Steadview Capital in 2014. Later, in 2018, Chinese gaming behemoth Tencent participated in a massive $1.1 billion funding round, along with Japanese SoftBank and Indian R&T Capital, making it a massive shareholder with a 10.4% stake in Ola Cabs. Other Chinese investors in Ola include China Eurasian Economic Cooperation Fund and Sailing Capital. Next up at number 3, we have Indian hospitality unicorn Oyo. Founded by an 18-year-old college dropout, Ritesh Agarwal, in 2012, Oyo started as Oravel Stays when Ritesh created an Indian version of Airbnb. However, after realizing that aggregating budget hotels was a bigger market opportunity, Oravel became Oyo Rooms in 2013. Now, as many of you know, Oyo's growth has been riddled with controversies, but that's a story for another time. Let's fast forward to today, where Oyo is India's leading hotel chain and has also expanded its presence globally over the course of the last 8 years. Today, they have more than 43,000 hotels in their portfolio, with over 1 million rooms across 800 cities in 80 countries. In order to accomplish all this, they've raised $3.2 billion from their investors, with Japanese SoftBank being a major stakeholder with 48% ownership. While Oyo has largely remained free of Chinese investors, just last year it received $100 million from Chinese transportation company Didi Chuxing. Moving on to number 2, we have India's leading e-commerce company, Flipkart. Founded by Sachin and Binny Bansal, Flipkart was started as an online bookstore back in 2007. At the time, online shopping was not as common as it is today, and in a sense, Flipkart's growth from an online bookstore to a full-fledged e-commerce company is synonymous with the adoption of online shopping in India. While Flipkart was led by the Bansals for a decade, it was eventually acquired by American retail giant Walmart in 2018 for $16 billion, making it the largest acquisition in the history of India's startup ecosystem. Even though Walmart owns 81% of Flipkart, there are still Chinese investors who own minority stakes in the company. Specifically, out of the $7.7 billion that Flipkart has raised, Tencent Holdings and Steadview Capital have invested an estimated $300 million. And finally, coming in at number 1, we have digital payments giant Paytm. Founded by Vijay Shekhar Sharma in 2010, Paytm started as an online recharge platform for prepaid mobile, DTH, and data cards, with an initial investment of $2 million from the founder himself. But today, Paytm is more than just a fintech company. They ventured into spaces like e-commerce with the launch of Paytm Mall, wealth management with Paytm Money, and online gaming with Paytm First Games. While Vijay is the man behind Paytm, he currently owns less than 20% of his company. Chinese technology giant Alibaba owns more than a 40% stake in the company, and if you take SAIF Partners' stake into account, Chinese firms own roughly 60% of the company. Also, Paytm's parent company, 197, has raised a total of $4.4 billion, and according to Crunchbase, more than $900 million of that comes from Alibaba Group. Alright guys, there you have it. Those were 10 Indian startup unicorns that are partially owned by Chinese firms. We hope that you enjoyed the video, and if you did, it would mean a lot to us if you left a comment down below. Also, if you're not already subscribed, now would be a great time to do so. We post new videos every week about Indian startups, entrepreneurs, and the latest news. So hit subscribe, and also while you're at it, you might as well hit the like button as well. And if you know of someone who you think would enjoy this video, please don't hesitate to share it with them. Thank you guys so much for watching this episode of Backstage with Millionaires, and I'll catch you guys in the next one.